Hey everyone, and welcome to the Bollinger Band video. If you are a member or even you've followed the website and the Telegram group and Twitter for a while, you may have kind of picked up on these entries and what I'm doing. I share about them a little bit on TradingView sometimes. But in line with our playlist on entries, I'm going to offer you just a really kind of basic look at what these entries are and how I use them. So you can do this on pretty much any charting platform. I use TradingView. Bollinger Bands come included in, I don't want to say every trading platform, but they're a pretty standard and common indicator. So in mine, Bollinger Bands is one of my favorites, so I always have it right there. And we're just going to keep the settings. You can come in here and mess with all the settings and change it, but we're just going to keep them as they come at default. Should be length 20, source close, 2 standard deviations. And I use this on the 4-hour chart. And I'll just tell you right off the top why I do that. The daily chart has a much lower win rate. I have gone back and tested this at the time for 10 years. I think it was 2019. So from 2009 to 2019, trading it on the daily chart was not profitable across all the pairs I back tested it on. The 4-hour was profitable, significantly so, and the 1-hour was profitable on some and not profitable on others. So I only traded on the 4-hour chart. So let's see what these setups look like. What we're looking for, and I'm going to show you a few just kind of basic examples, and then I'm going to show you actual entries. What we're looking for is essentially 3 things. One is for price to test one of the bands. So not the middle one, but one of the outside bands. So in this case, we're going to be looking long. So we want it to test the lower band. We'll check. We have that right there. We want the stochastic, which again should come stock in every, I know it's in TradingView, I know it's in Sierra charts, I know it's in MT4, MT5, I know it's in NinjaTrader. We want it to be down here below 20 in the oversold. Now I don't think Forex, pairs, currencies can be overbought, oversold. I don't buy into this indicator completely as it's supposed to be used. It works much better in stocks. But that's what we're looking for. We're looking for price to test the lower band and to be an oversold, which it is. And then we're looking for a bullish reversal pattern. So in this case, we have just a bullish engulfing candle, right? These two here. We can see that this bullish green candle totally engulfs the one before it, which is an engulfing, a bullish reversal pattern. If you don't know your candlestick patterns, I encourage you to type in candlestick patterns baby pips into Google or DuckDuckGo or whatever search engine you use and get to know those candlestick patterns. We can see over here the kind of same thing was happening, right? We have stochastics and oversold. It's testing the lower band. But I did not take that because there's no clear reversal candlestick pattern. This one has a clear pattern. The few patterns that I trade, I'll show you as we go through, but are engulfing candles. I trade a 3 candlestick pattern where the middle one's a doji and then a reversal, and I'll sometimes trade the 3 inside up or inside down. And I'll show you what those look like. So there's an entry. We're just going to go over entries for now. We're not going to talk stop losses or take profit points. But there's an entry. It's testing the lower. It's in oversold, and it's showing an engulfing candle. Now let's go over to the Euro Swissy. Here's one right here, another engulfing situation. Engulfing bearish candle this time. Stochastic and overbought. It's testing the upper band, and we would take that short. Now here's one I would not have taken, But this is a nice reversal pattern. The green candle coming in, the little doji at the top, and the reversal. Now, I wouldn't have taken this for a couple of reasons. One, we're not actually in overbought here, so that's a no-go. Two, there's already a previous high right there. What I like is for it to come up and test it, and for that to be my entry. If it comes up and tests it and then does that, we wouldn't have entered because it's already kind of tested it there. The truth is, if we look back here, we actually kind of have an entry with these two candles. The problem is it's not really, by the time that candle closed, it's not in overbought anymore. So those are no-goes because they're not in overbought. And then this one, because it's hard to explain, but because basically it didn't just test it and reverse. See this one? It tests it and then reversed. This one tests it here, reversed, then retests it. I don't like those. So I'm just going to keep going through and show some examples. I don't know why I marked right there. Must be an entry. Nope, that must have been from something else. Well, let's see if there's any entries here. Nope. Pound Swissy. There's a nice entry. Stochastic and oversold. It's testing the bottom in a big engulfing candle. That was a good entry, a winner. I do not like when they ride the band. So these ones, even though this is not an engulfing candle, but let's say it was, I wouldn't take that because it rode along the band. So I'll show you another example of that. Here's a 3 candlestick pattern right here, right? A big red one coming in, a little doji-esque, and a green one coming out. Now that's not in oversold anymore, so I wouldn't have actually taken that necessarily. I did take that, and I'll tell you why in a second when we come back around to these trades. All right, let's leave it there. Now, does this work in stocks? Yes, I use the daily chart on stocks to trade this system. Here's one. Oh, nope, that's actually not one. Let's go find one. Here's one. All right, price comes down into the lower band. It tests it, but then pulls back a fairly good amount, and we get the engulfing candlestick there and the overbought. I'm going to delete this line just so you can clearly see. Engulfing candle would take that long there. And that's it on that chart. Here's another one of those setups. A big red one coming in, a doji, and a big green one coming out. We're down in the oversold territory. So yeah, those are the entries. Now, if you take notes, and I highly recommend you do, we can take a few notes here. We want it to test the band, and we want the stochastic to be an overbought or oversold, and we want a clear reversal. Now, you can decide for yourself what that clear reversal pattern looks like. Like I said, I trade engulfing candles mostly, and these 3, I don't know what they're called is the truth. These little 3 candlestick patterns where one leads in, you have I think it's called a morning star or evening star, and then a reversal candle coming out. We want that reversal candle to be nice and big like that one is. So those are the candlestick patterns I trade. Feel free to mess with it. If you find another pattern that works for you or that you want to share with me, leave it in the comments below. Send me an email. And then there's 2 more things we want to write down here if you're taking notes, and remember. I do not like when it rides the Bollinger Band. So here's an example where it comes up and it's kind of just riding it. And then here we got a bit of a reversal, right? It's not the most perfect one, but we had a big candle up and then a doji with a huge upper wick and a big candle down. I wouldn't have taken that, even though the stochastics are up there and overbought, because it had ridden the Bollinger Band like that. So no riding. And then the other one I don't like is, I forget what pair this was on. I think it was this one. The other thing I don't like is when it tests it and then retests it right after. So like on this eBay, we kind of got, or excuse me, was it the IBM? There was another one where we kind of got a test and then a retest. But this is a good example of one not to take. It comes up here and we get the engulfing. The stochastic isn't all the way in overbought, so we wouldn't have taken it. And then it gives us another kind of reversal signal again. The big candle up, the doji, and the big candle down. I don't like that. We can group it in with riding. It's riding the Bollinger Band. So now I'm going to talk about how to use this, because I don't just trade this system naked always. Sometimes I do. We'll start with the Euro odd, which is a trade we actually took. You can also notice that this is on this chart, which goes from April 1st to, what day is it? It's May 27th today. So almost 2 full months. I only got 1 entry with this system. If you're finding a few entries a week, you're probably finding too many entries. I'm of the opinion always that I would rather trade less entries that have a higher win rate. Pardon my dog barking. So this one is a really good example, and we talk about this in other videos. We talk about it in the moving average video. We definitely talk about it in the break and retest video. I talk about it in a lot of videos. We look for confluence. We look for other indications that this is a good point to enter. So the moving averages do nothing for us. But on the 4-hour chart, we just had this little area tested, right? I want to remove the Bollinger Band. So we just had this area tested back here. Now price is coming back down into it, and that's right where we got the entry on the Bollinger Band. Solid. I'll take it. So that's 2. We find the Bollinger Band entry and it's good, but also it's happening right at a key level. That's what I mean when I say I don't just trade this system naked. I do use other things with it. So this one, we had an entry here. Sure enough, it's right at this level as well. So it's kind of a little break and retest entry as well. So that's a good one. I missed that. I don't have a reason. I think I had just been short on the Euro Swissy, it looks like, based on these little arrows, and it came back and hit stop there. And usually when that happens, I try not to trade that pair immediately because I can revenge trade. But that's a good entry. Had I seen that and been looking at Euro Swissy, I would have taken it. It had broken this level, and it was using that level kind of as a resistance. I don't know entirely what I saw on this chart or why I have it in this grouping. I'm actually just going to remove it because I've done that twice now. Let's remove all drawings. All right, so we have one down here. There's not really anything going on. I mean, I guess we could draw a line at the base of that and take it off that. It's a decent entry. As I talk about in the support, here we'll draw where the candles actually close. As I talk about, I'm actually going to practice what I preach here and do it. Support lines are not lines, they're zones. People call them lines and it's a misnomer. So I'm going to use that as the zone, and I'll tell you why. We talk about if you're interested in this, check out the support and resistance video. We talk about support and resistance entries as well as how to draw the zones. But I just drew it from the bottom of the candle to the bottom of the wick. So sure enough, we got a nice entry here. All right, the engulfing candle, bullish engulfing, we're in oversold, and it's testing our little zone. So a confluence of indicators, multiple things happening saying that that's a good trade to go in on. Now here's a great example. I had this trend line on the Kiwi yen. I drew the trend line after this, and this got hit. Now we come down here, I'll move this line, and we have this just barely test the Bollinger Band if I scroll in, right? Just barely touched it, and it's testing my trend line. Stochastics are in oversold, and we get the reversal candle right there. That's a perfect long. I love it. Right off a trend line. Now again, we get another one here. As you can see, based on the arrows, I took this. I was looking at the 1 hour chart, I actually believe, when I took that. But if we got another kind of setup there, I would have taken it. Here's a good entry. This is what I talk about, 3 inside up. A candle coming in, testing, and then these 2 candles that are bullish right after are bigger than that one red candle. Now I didn't take that one because it kind of had ridden it right there really hard, and I don't like that, as I shared. So really that's it. That's the one good one that we have here. It tested the Bollinger Band. It tested the the trend line. It wasn't riding the band coming in. It gave a clear reversal, a big red candle coming in, a doji, a big green candle coming out. Just perfect, just beautiful. That was a good trade. All right, here's another one where not really a 3 candlestick pattern, but there's 2 candlestick pattern called tweezers, I think, tweezer tops or tweezer bottoms. I am horrible with the names of candlestick patterns, but we can see it right here. The 2 kind of dojis with high tops, and then the red reversal. I actually took that, as you can see, based on that little arrow down. This is my demo account, just so everyone knows. I do use it to copy trades over into my real account, and I use all my charting. But there's a nice entry, right? We got the tweezer tops followed by that nice little red candle. And if we pull out the chart, let's look a little longer. Maybe it happened, put to the wick of that, oopsies. Right, we'll just use, just so you can see what I'm doing. Again, support and resistance video if you want to learn how I draw these more in depth and how to trade them. But just from the bottom there to the bottom of the wick roughly. And let's see, nope, it didn't touch it, but we have a great confluence of indicators happening here. It didn't actually, this is why I say they're zones, they're not perfect lines. Even the moving averages, which is literally a line of points, is a zone. We should treat it like a zone. This turned around right here, right at pretty darn close to the previous kind of support resistance zone, and the moving average is crossing through that zone. Anytime the moving average, especially the 50 period or the 200 period, is moving through one of my zones, like right here, I'm looking for a short opportunity, because that's a confluence of indicators in itself. The fact that this gave a Bollinger Band setup right when that was happening, really close to it, makes it an absolutely awesome entry. So we'll just scroll through and see if there's any other entries. Doesn't look like it. Oh, we could have taken this one long. I did not, as you can see based on the chart, but there's a nice reversal. The red candle coming in, the doji, and the green candle coming out. It is way into oversold beautifully, but there's not really a confluence of indicators. There's no support and resistance there. It's not bouncing off a moving average or trend line, so I did not take that. And I know you can look at this right now and say, oh, you would have at least gotten a TP1. Absolutely would have. I still don't take those trades. So when we switch over to stocks, I use the daily chart. I don't know if I mentioned that the first time, but it bears repeating that I use the daily chart on stocks for this system, and I use the 4-hour chart for Forex. All right, so let's see if we can find an entry here. I'll draw my zone from this little doji down to the bottom of those as the buy zone. I'm going to slap on some moving averages just to see. All right, we'll get rid of this one for this demonstration, this example. So this is lows. If you know, if you've been following me, you know I've been watching this stock for a while, Lowe's and Home Depot. You're probably sick of hearing about them, but that's okay because we're going to talk about it anyways. All right, so not really any good entries in here, no clear reversals, no tests. This one kind of rode it and then tests. But so I said I took this. This is the one I said I took, and I'll show you why in a minute. So I said I don't like when it rides. I don't like when it rides like that and then comes off and kind of retests. However, this one had a clear reversal right there, right? Those two little candles, I'm going to zoom in. Those two little candles, a clear engulfing candle, clearly testing. It's in oversold. So we'll count the things going against it as -1, right? -1 going against it. But let's count all the things going for it. One, I mean, we're not going to count that it hit the Bollinger Band because that's a given. One, it has a really clear reversal, my favorite, engulfing. Super clear. One. Two, it's happening right at a little supply zone, support resistance zone, so that's 2. 3, the stochastic is still, sometimes it'll be like right crossing the line when we enter. This one is still at this candle close, fully and oversold. And 4, it's happening right at the 200 period moving average, my favorite of all moving averages. So we can take a -1 on that, and we still have 3 kind of confirmations to tell us to go in. So that's why I took that one. I don't actually do the points in my head like that, but that is one way to think about it is, yes, that's a kind of a ding that I wouldn't want to take that one because it rode and kind of retested right after itself like that. But all the other confluence of indicators, all the other indicators working together means it doesn't matter. I'm going to take it. If we had the riding like that, and let's say the moving average wasn't there and it was just happening at a supply zone, I still might take it. If we took this off and entry was just being given right here and there was no, let's just zoom in. Pretend there's no supply zone that could have been drawn. If this was just the entry with the pretty nice oversold condition on the stochastic, I would not have entered it. All right, and then lastly, we have eBay. So, all right, here it is. This one gapped. I'm not crazy about trading gaps, but have a nice reversal there. The red candle down, the doji, the green candle up. We're in the kind of roughly oversold territory. When this closes, right, when this candle closes, we're actually, the red is not in oversold, but the blue is. So not the best entry. Definitely not the best stochastic situation. It's a great engulfing candle, and it's happening like perfectly at the trend line that's been respected. So confluence of indicators. So I'm just going to rehash. I'm just going to go over what we've talked about really quick. And again, for your notes, the points you need to have down. We want the upper or lower Bollinger Band to be tested. We want the stochastics to be an overbought or oversold. We want a reversal candlestick pattern. I use engulfing candles, what I think are called morning or evening stars, and the 3 inside up or inside down. You can find other ones that work for you, absolutely. Those are just the ones that I have found that work for me. We don't like when it kind of tests the band right after each other, like maybe it tests and then it bounces away for a candle or two and then tests again. We don't like those entries. We don't like when it rides the band, when it's really just kind of hugging it the whole way. And then we use the 4-hour on Forex, and I use the daily on stocks. With this one, we're actually long eBay right now with a stock. I think on I think on IBM, back wherever that entry was, back here, I don't remember where it was now, back here or back there, I used an option on that, a vertical call spread. So you can use this to trade options, you can use it to trade naked stocks. I use it on Forex, I use it on metals, I use it on oil. With metals and oils, I treat it like Forex and indices. And then the last thing is to look for a confluence of indicators. So don't just trade this system. You might have some wins. Sometimes I have just like a really, let's see if I can find an example. Sometimes price, like an asset, let's say a currency pair has just been going up for days. And I get a pullback to the Bollinger Band and a perfect little evening star or whatever it's called, where the candle goes down, we get a little doji with a huge bottom wick and then a candle up. And sometimes I will take it. I'll lessen my risk probably, but sometimes if it just looks like a perfect pullback, I will take it. But generally speaking, almost always, I would say more than 9 times out of 10, I only take these trades when there's a confluence, when it's either happening at a moving average, it's happening at a key support and resistance zone, or it's happening on a trend line. It can also happen with a break and retest, so be sure to watch the break and retest video. All right, so the last thing we need to go through is stops and limits. So these are often not my biggest trades. They often hit TP1 and then go back to stop. So it is what it is, but let's talk about where we're setting our stops and limits. So I don't even remember. Well, here we go. Here's one we're taking. So long position, we would have entered there. I'm going to drag this, as you probably see me do. I'm going to drag it out of the way just so we can see where it is. Now, we want to set the stop below, when we're going long, we want to set it below that little candlestick pattern. My suggestion is to set it with a little bit extra room, because often what happens with these entries, you can see one up here. Often what happens is it comes back and tests that same area. So I'll show you an example of that, but I would have set the stop, let's say down here with a little bit of wiggle room. We'll put it at 50 just to make it even, 50 pips. Now TP1 is going to be 1-to-1 risk to reward usually. So that would put our TP1 there. And we would have gotten it. We would have gotten it right there perfectly at that candle. When we hit TP1, we're moving our stop up to entry. For TP2, what I do is I just use the chart. I do not do a 3-to-1. I do not do a 2-to-1. I just use the chart and where I think it'll go. So on this one, I probably would have set it up here in this area. That gives us a 2.95-to-1, and we would have gotten it. So just to reiterate, we're setting the stop just outside the candlestick pattern. We're using 1-to-1 on TP1. That's where we're going to take half the profit off the table, and then we're going to move our stop loss to entry. For the final limit, the TP2, I use the chart. I don't look at how many pips it is. I don't use a strict 3-to-1. Sometimes where I set my final limit is 2-to-1. Sometimes it's 3-to-1. Sometimes it's 4-to-1. I try to keep it in the 3-to-1 area, if that helps you know. So here we have the Euro Swissy. This is one part of me sniffling. I'm a little bit sick. This is the one we took short, so I'm going to do short position. We're taking it right there, that candlestick. We'd set stop with a little wiggle room up there. And you can see what I mean, where price did come dip way down, and then it also came back up and retested. So that's why we offer just a little bit of extra wiggle room, because of spreads, because of movement. But we're 19.6 pips up there. So I'm going to put my limit 19.6 down. So that would have been a little bit of a scary one, but we would have gotten TP1 here and moved stop to entry. And then I probably would have set my final limit down here and we wouldn't have hit it. Would have just set it at this swing low, and we would have gotten super close and come back and hit stop. Oh well. All right. Here we have this one. I would have set my stop loss. Oops, let's scoot over. I would have set my stop loss below those with a little bit of room. That's 40 pips. So TP1 would have been there. And it doesn't matter where TP2 is necessarily, because it would have hit that, and then it looks like it would have come right back down to entry there and stopped us out. But I probably would have set my TP2 like there. I would have been pretty close to getting it, but not quite. So it would have come super close and then come down and hit stop. So I'm just going to show you one more long position. All right, let's go to the dollar CAD. I like that one. All right, so this one is a little bit different, right? Because I'm going to get rid of this. Because we didn't actually test the zone. So on these, I'm actually going to give it a little bit of extra wiggle room. Would have entered here. I'm just going to pull it so we can see the. And instead of setting it right above, I'm actually going to set it up into that zone, because I think there's a possibility it's still going to come into that zone. What that means is, unfortunately, we're going to get a smaller lot size as we're risking a fixed percent. But there's always a possibility when we're close but not really hitting it that it's going to come back up and test that and then go. And we want to stay in through that. So we got 77.2 pips. Boop, boop, boop. There we are. We would have gotten TP1. Now for TP2 on this one, this is why I wanted to show this one. There's not really a nearby support or resistance to use. So what do we do when that happens? What I would do is just use a strict 3-to-1. So we would have gotten it down here. There's no nearby support or resistance, so that's what we do. All right, so that's it. We set the stop above or below the candles, depending on if we're going long or short. If it's like this US dollar CAD one, which if you remember, we're entering because we got the little tweezers and the reversal. The stochastic isn't fully in overbought, but the fact that it's happening right at the moving average coming through the supply zone, and it's happening right there really close, means we set the stop a little bit up. Because the stochastics aren't even in overbought at all, I would take half risk size on this trade. I wouldn't take a full risk size. I would cut my risk in half and take this trade. The last thing I'll mention is I take 1% on these trades. I use 1% risk. I use 2%, as we talked about in the break and retest. I use 2% in my algorithmic trading that I don't share with you guys, but a lot of my trades come from. I use 2% in trend channels usually. I use 2% with most of my trading. With these, I use 1%. And the reason being that they're just not, they don't have, I showed you all winners today. I cherry picked these. They're not all going to be winners. This has a lower win rate than other aspects of my trading system. Also, these are off the 4-hour charts, so the trades tend to last a little bit longer. And I do not use a high leverage account. I don't use like a 1 to 100 or even 1 to 50 leverage. So I like to keep some of my capital free. So I choose to use 1% on these. You can investigate for yourself what works. But that's it. Those are the Bollinger Band setups. If you have any questions, feel free to reach out to me at matthew@mrobertstrading.com. You can leave questions in the comments. Visit our website at mrobertstrading.com. You can sign up for a weekly email that includes a market outlook, what happened in the week before, what assets, Forex pairs, or stocks I'm looking at and waiting for to enter, how our trades are going for members, news events and what I'm watching. You can find all that at mrobertstrading.com. And good luck with this. Remember to demo it and look at charts and demo to forward test before you actually take this live.